Welcome. Basically, this webinar is going to be about price action, and the reason behind that is because without this, you can't really determine too much about the market. Um, this actually prevents you from like having a lot of doubt. It gives you more confidence, if anything. Can you guys hear me? Okay. All right. All right. Give me a couple seconds. Let me lock my door. All right. Well, back to what I was saying. Basically, without this, you won't really know where the market is going to go. You need this to predict certain things that's going to happen in the market. It gives you more confidence in your trades. Overall, it's called price action. All right. Now, what is price action? Price action basically gives you support and resistance based upon the candlestick patterns. I basically just use the M5 chart to draw. I do not trade off this chart. I draw on this chart and I give it to reference to the H1 and M30 chart, and it works beautifully. I don't really draw too much on the M1 chart, but sometimes I can. The focus is to draw on the M5 chart. Now, how do you draw price action on this chart? Very simple. We have support lines and resistance lines. Okay? I'm just drawing a random line right now. I'm not really trying to match it up with any candles. Okay? That's very self-explanatory. Bottom line is support, top line is resistance. All right? And with that, basically what it does, it lets you know where the candles are going to stop at or where the candles are going to like break through. Usually it takes a very big candle to break through support and resistance, and especially your trend lines. Okay, so what I do, I zoom out all the way on my M5 chart and I take the horizontal line and I look for the candle bottoms. As you can see here, I look for this and I will draw a line. Boom. Let me take these off. All right. Now I'll draw another line on these wicks. See these wicks? Boom. Boom. Another line. It's basically just giving me references in the market. So when I zoom in, I just alter it. I bring them closer to the wicks. See that? This was actually respected. Candles try to go up. This was the spike from earlier where everybody was like blowing up, going crazy. You can see it better on the H1. This big wick. As you can see, it basically was a big candle trying to break through support and resistance. What happened was, hold on. What happened was the support and resistance lines pushed it all the way back down. It was just a trap move because the market is really going to be going down. As you can see, it's been doing that for a while now. On the H1, when you go back to it, actually, you notice that the lines that I drew on the M5 chart, you can see them here, the wicks. Boom. That hit resistance. This right here, it hit resistance. This bottom line was your support. So it's right now in ranging throughout the Asian session, which is on right now. This is what this blue square is about. And what's happening is that is just going to keep ranging around here. A big candle is going to have to break it. It already touched yesterday's high. So if I throw back on these markers, you're going to notice that the day sessions, like I was talking about from before, opened up at 5 p.m. today. See? This line right here happened at 5 p.m. today. So if I bring over my crosshair, you're going to see 00 at the bottom. That's the GMT time, which is 5 p.m. Eastern time. Okay, since we're on the hour chart, you can see right here, this is 6, and this is 7. 2 is 7, so this is where we're at right now, and the candlestick is going down. So at 8, at where it says 3 GMT, you're going to notice that it's going to keep going down. Right now it's doing levels, so it did 1, 2, 3, 4, and it's going to drop. And it's going to keep dropping and dropping and dropping and dropping and dropping. And we're not going to get we might get a midweek reversal today. We probably won't. And the reason behind that is because too many buyers is trapped up here already, so I doubt we're going to get a reversal. They want to kill them. And how they're going to kill them? By dropping the market. Okay. So now we understand a little bit more about support and resistance on the M5 chart where we draw them. I'm going to draw them again, by the way. You see how it just ranges. Look how beautiful the lines are. You drew it on the M5. On for the wicks. See right here, the body. Boom. Tested again. Boom. Didn't really happen. Boom. Market just going down. It already caught the high on Sunday. Well, on Monday's early market. Okay? Caught the weekly high. This is not going to happen again. You're not going to see this high ever again. The market is going to go way down. Down, down, down. To the midweek reversal. So if I go to the hour chart, this was the previous high, which was the reversal, where we're still in, waiting for the new midweek reversal to happen. Okay? So we're looking for the midweek reversal to happen at the weekly low. And now, how do we determine a trend? It's very simple. We take a trend line. Boom. H1 chart. Took a trend line. The market is going down. See the slope? Usually the trend lines bounce off of a reversal pattern, which I love to call the RR, which is a golfing candle or a dark cloud cover or a piercing line. Okay, so you see the slope is going down. See what they have in common? A golfing. This is a morning star, another golfing pattern, a big golfing pattern. So what happens when it breaks out like that a little bit? You just take another trend line, you just draw it off again. Boom. See the pattern? Reversal. Here's another reversal right here. And then it broke out. This was the annoying spike that happened. And it tested this trend line. Okay? And hit the weekly high. So, as you can see, I'm going to take this back off. Make sure you guys can hear me. Y'all can hear me? We're good? Because I'm using on my Max mic. Alright, perfect. So you see right here what happened was, let me edit this a little bit better. Alright, as you can see right here, it tested this high. See? Perfect. Boom. So the spike did not phase me. I was at work. I didn't really care. I didn't get any more sales up here. Kind of missed it. Went to get some food. It tested this. I already know it's a downtrend. It's going to continue downtrending until midweek reversal. So I'm not spooked out. This is perfectly normal. Boom. That's why you have to play low value. And you shouldn't even be getting on a Sunday on these trades. Or a Monday. Because you want to wait till Tuesday, Wednesday, or Thursday. Get into the midweek reversal. Get up here. So all of these little spikes, because you know it's going to test the trend a couple of times. So it makes no sense to get it. Because if you have high volume, like let's just say you put in a buy right here. And it went up. You had a standard on a buy. And it went down all the way down here. You probably would have been negative. Hold on. Let me actually show you how much negative you would be. If you had a standard up here, it would have dropped you all the way down to like negative $220. Boom, let's do for this one. If you caught a spike and you got to buy up here, you would have been right now in the whole $368. And probably at the end of the day, when it goes all the way down here to this trend line, which is going to break past anyways, which is going to be a big candle, you're going to be down like $1,000. You're going to be like, what the hell? Kind of missed that spike though, fuck. So basically when you see a trend line, how can we determine a breakout? I usually don't do the breakout trend lines anymore because I use basically high time frames now, but that's for the argument. How do we determine the breakout? You take a high trend line. Let me show you the M1 chart. Because I know some of y'all might want to scout on some trends. Boom. Alright, so I took the high, which was the yesterday's high. Okay. You see the reversal pattern right here. All I'm going to do now is take a low. Which low I'm going to take? I'm going to look for one of these lows. Is everybody else having problems with me talking? Like it's breaking up still? Alright, well, it's recorded. If anything, on the playback, it's going to be crystal clear. So it's not that big of a deal. Just visualize with me, guys. Visualize. So right here, what you see is the trend from the high, and I took the trend from yesterday's low. This is the M1 chart. As you can see, it's respecting this trend. I don't like using this because it's a little choppy. As you can see on the M1 chart, it's going to keep falling. Next time it's going to actually test any type of support, it's going to be down here. And as you can see, there was a lot of support that happened up here already. If you go look at the support lines, you can see it right here. Boom, tested once, tested twice, tested 3 times on the M1, and this is going to keep going down. It's going to try to reverse a little bit. It's going to respect this line, and it's going to keep going down. Hold on.
Your line is now muted. Your line is now unmuted.
Alright, so back to the M5 chart. As you can see how it's respecting the reversal patterns. Alright, so we're good. Alright, so as you can see right here, it's respecting the reversal pattern right here. Boom. The same line that I drew on the M1 chart. It's respecting the trend. So you can see a breakout happen around this area later on. A breakout is when this breaks past this candle. Past this trend on this trend line right here. It's gonna be a very big candle. It's gonna break out. Boom. And you're gonna see it just rapidly fall. And I know it's gonna rapidly fall, and it's gonna touch right here. This red line that I drew on the M5 chart, where I zoomed out at, and it's gonna bounce off the support, and it's gonna test this, and this line right here is gonna become resistance. Okay, it's very important to know how this runs. It's gonna be a little complex. You're gonna have to demo it out a little bit, but it actually saves you for knowing the trend of a market. And since we're honestly in a downtrend anyways, because of midweek reversal, you shouldn't be placing any buys. So you don't really have to use this 100%. If you want, honestly, just stick to the H1 chart. Take it from the midweek reversal point of view. Draw your trend line going down. And then you just have your true trend automatically. So this spike wouldn't have affected you. If you wanted to, you could take another right here. It would have respected that. Worst case scenario, it would have got traced that. But this is NFP. So I already know that one had got retraced. That won't make no sense. Market makers would lose money. And then right here, you could have took another one. And I respected the trend. Reversal pattern, boom. So you could use like short trend lines, which fills in the gaps. But overall, you want to take the high. So let me write that for you right now. Okay, you want to take the high on your trend line and draw down to the low. And like I said earlier, the top is the same concept as the horizontal lines. The top of this line is resistance. If you draw a trend line from the bottom, it will be support. So if I take a trend line from here to here, this is basically will give you way better results. It would be support. See how it bounced off right here? Boom, it went up, consolidated, mini consolidation, tested this high, but went down. You're gonna have a breakout later on when this gap closes out. When this gap starts to close out, we're gonna have a breakout. It's not gonna just consolidate and skimmer through this. No, this is the H1 chart. It's very powerful. You're gonna have a very big candle breaking out. So if I go check the news, and the news basically is going to tell me something about the USD. Not now, but later on today. 10 a.m. We're going to have news. So we're looking for the midweek reversal most likely on a Wednesday. 9:30. That's roughly midweek reversal time. 2. Yeah, I'm going to make an educated guess and say the midweek reversal is going to be on a Wednesday instead of today, because there's not even a lot of USD news. You have news at 10 a.m. and 10 a.m. tomorrow. I highly doubt you have a reversal. I mean, if it happens, it happens, but it's gonna be any of these days. So you really want to look for your news. It might even be Thursday. CAD got a lot of news. Euro got news. JPY got news. GBP got news. These are all the reversal pairs that actually correlate to the pairs that we focus on, which is USD CAD, Euro USD, USD JPY, AUD USD, and of course USD CAD. Okay. Basically, you just want to check your news. That gives you more hints to when a mid reversal is going to occur, and you just want to follow your trends. Always follow your trends. Yeah, thank you, Rico. So you want to always follow your trends, and basically you cannot really lose. You really can't. It's really hard to lose, especially when you're on a higher time frame, getting into these midweek reversal trades. Okay, this is your midweek reversal. If you get into these trades, you really could avoid all the mess. That's why entry. Oh my God, I'm about to write that. This is like the best thing I could always stress out. Entry is always the most important in trading. I can't stress this, guys. The entry is always going to be the most important in trading. These midweek reversals come Tuesday, Wednesday, and Thursday at 3 a.m. to 8 a.m. Eastern time. 3 to 8 a.m. Eastern time. Okay? And once those happen, that's your money. You're going to be in money. Rico been making money. I've been making money. Q been making money. Anybody I tell the strategy to the setup to, it will be making money. So we really would just want to focus on using the H1 chart, if anything, to draw your trend lines. The M5 chart, you can draw your trend lines, obviously. All right, cool. So you just want to draw your trend lines on those charts. H1, M5. I do not draw on the M15. I do not draw too much on the M30, but you can. See right here, reversal, boom, connected. Boom, connected. You can draw on the M30 if you want. I draw on the M5 because it's more zoomed out. For that time. When I'm on my phone, I draw on the H1. Okay, if you want the M30, matter of fact, let's just scratch the M5. Let's just use the M30 and draw on the H1. Let's stick to that, so it's more simple. So let me just write it here. So it's more simple for you guys because I do things in a little fast pace sometimes. All right, so you just want to draw your trends on M30 and H1 because, like I said, M30 is obviously on two candles that form one H1 candle, and vice versa. All right, boom. This is your reversal pattern that started midweek, as you can see right here. where the trend line is connecting. Here it did an engulfing candle. Here it did an evening star pattern. So I'm gonna zoom in so you can see it. So you did an evening star pattern. It gapped because it was news that pushed this down all the way. When it gapped, it actually did an average about, it's pretty sick. On the entry of just a midweek reversal, it started off pretty sick. Well, if you caught this doji when it's forming on the M30, and you caught the gap, just the entry alone, and you had a standard, I do want you to know you could have made $1,000. The standard on entry, $1,000. And how many hours would that have been? 1, 2, 3, 4, 5 hours in. 5 hours in, you could have made $1,000. And how would you have caught that? Well, if you went on M15, you could have caught the doji pattern that formed on the M30. H1 that formed on golfing. Actually, was on the wrong chart. I'm sorry. It actually took 3 hours. You would have made $1,000. Yep, 3 hours, not 5. $1,000 just on entry if you caught the doji. It's really that easy. And then follow the trend. You would have been good. You would have went up, lost some money. So let's just say you was up 1,000. You probably would have lost a little bit right here. When it went down, would have been around 600. Still in profit. And just let it ride for a couple of weeks. A couple of days. Until the next week. Yeah, I'm so jacked up for midweek reversals the same weeks. If you caught that doji, you could have been up 3,000 on a standard. I mean, I'm not telling you guys to go out there and start throwing standard trades. Use your value to the best of your ability. Because if you start using standards, I promise you, if you do not have the right results, you're going to lose money. You will lose money. It's all about having the right risk management, the right proper value, okay? If you have an account with $100 in it, do not pass 0.05 on your trades. If you're getting a trade on the entry, you could do it 0.10 because this is called a safe zone. I'm going to show you what I mean by a safe zone. Let me just clean this up. Forever in profit. Boom. All right, cool. This is a safe zone. Known as the blue tracer. See this, guys? The blue tracer? Let me drag it up. Hopefully it don't trace back down. So I have to think it up. Alright. If you have the blue tracer. Yeah, I figured it was going to do that. Alright. If you have the blue tracer, which I put in the file section. You're going to see this. This setup. When midweek reversal was forming, the blue tracer was saying here. Let me write it out so you can see. It said this yesterday. Yesterday high. That's what the blue tracer was saying. Because this daily was the yesterday high. So right here, boom. See this? The lines? This was on the previous day. So when the blue tracer said yesterday's high and the midweek reversal forms, I believe, oh crap, I think it was Thursday. No, the midweek reversal happened on the Tuesday. So right here, when it formed on that Tuesday, this was that Monday's yesterday's high. So the blue tracer was putting this into a pit. This is called the safe zone. This is probably one of the most significant things you guys can do. So you know how to trade with the right value. This is called your safe zone. Where you're going to want to put in a mini lot, a micro lot, or a standard lot. The reason behind that is, do you see any retracement forming in this area? Did this go back up to retest this high? No, it didn't. This is up here for more than 90 minutes. Okay? It's still up here for 90 minutes. More than 90 minutes. This is the hour chart. So we got what? 1, 2, that's 60. That's 120. That's 180. And so on. Okay? I don't like math. Don't judge me. I really don't. So it's still up there for 90 minutes. And what happened was this became a safe zone, so it didn't retest the high. This is called the breaks. All right. This is where you collect your money. We go rob the market makers for their money every week. It's fun. I have a thrill in it. Everybody gets like a crazy rush, and it just drops. Boom. Then y'all say hi. It was getting retested over here when it did happen. And what happened? It just kept falling and falling and falling and falling. NFP killed it. Kept falling. And now we're in consolidation, and we're going to continue falling until the midweek reversal actually happens. Okay? And that's basically the main thing you want to do when it comes to trading, with the price action, knowing when the setups are going to be taking place, knowing the true trend of price action, knowing how to draw these trend lines, support and resistance lines. When I was on mobile today and I saw the spike happen on H1, I instantly was like, oh, okay, cool. I already know what's up. So what I did was, when I was at work, I just dropped one of those. I was like, it's not going to get tested again. Bet. And I drew another one over here just to be like, okay, resistant 1, resistant 2. That's all I did. And I knew that once I had this line set up first, so when it actually pushed past this, and I knew the true trend was ready to begin with, because I actually did have the trend line set up on my phone as well, which was from right here. Once it tested, which to me, no, I actually had it up here, which to me was like, okay, I already know what was up. It was going to go back down at some point. I had it here. I was like, okay, cool, a little semi breakout, not too big of a deal. It never was a real big candle that broke out. It was like a little consolidation type of move. That's what I mean by consolidation. If big candles your breakouts, when it does like a little semi consolidation, it's not a strong move to like change the trend. A real trend has to change with a candle like this, a candle like this. But the truth of the matter is, it's a downtrend. See, it was trying to go up, a big candle changed the trend, it went down. Consolidated, big candle changed the trend. When it consolidates on a downtrend, it's going to drop hard. See, it's consolidating right now. So that's how I also know it's going to drop hard. Then we go to another consolidation phase. Consolidation, dropped. Consolidation, dropped. Now look at the uptrend. All right, here's the maybe reversal. Right here, reverse consolidation, big candle, boom. Consolidation, big candle, boom. Consolidation, big candle, boom. Had your reversal, boom. Consolidation, boom. Consolidation, boom. Consolidation, boom. Consolidation. Obviously, what's gonna happen? Let me write it. I just want to have some fun. I mean, the market to me is just predictable. It's like, it's really fun once you realize how it runs. It's like, damn, boom. All right, so it drops. It drops again. Maybe reversal happens. We're going to get it. Like I said, market is 100% predictable. We are forever in profit. There's not much really else to talk about. Price action is where you really want to focus your attention to. Hope you guys take notes when I do talk about these things, because everything that comes out of my mouth is actually powerful with the long-term trading. How do you spot midweek reversal? I just went over that. Basically, let me do it again. It happens Tuesday, Wednesday, or Thursday from 3 a.m. to 8 a.m. Eastern, okay? When it happens, you don't know when exactly it's going to happen. You're going to spot it by looking for a reversal pattern. Danny. Oh, man. Fell. Danny. Alright, so basically, this is how you spot the midweek reversal. The blue tracer that I put inside the files. If I zoom in right here, when it was doing, what do you call it? When it was actually doing an uptrend reversal, which is what we're going to be looking for this week, actually. So it's actually something you guys, oh, damn, this chart is bad. Let me think of another chart. GBP, USD. This is actually a bad chart too. I'm thinking of another downtrend chart. All right, perfect. Clear this up. I'm gonna show you again. All right, Andrea. What you're gonna do is when you have the blue tracer. This is another chart. This is one of the other charts that we use. When you have the blue tracer active, like where it says right here, yesterday's low, it's going to say something like this. You can see that it's underneath the pit. It's going to pass yesterday's low. It's going to be on the weekly low. It's past yesterday's low. It's at the weekly low. It's down here for more than 90 minutes. Okay? When it's down here for more than 90 minutes, it means that a Brinks trade is about to set up. It had a reversal. This reversal is really, really choppy, but let's see what it is. Because I didn't really take this trade on this chart. Really didn't. I didn't really want to take this trade. If I see reversal look like that, I wouldn't take it. But if you see right here on the M15, if the reversal's looking kind of funky, and you know it's down here for like more than 90 minutes, you already know what the play is. So right here, as you can see, this is the 15-minute chart. You can see the reversal more clear compared to the little higher time frames right now, because that reversal pattern was a little choppy on the higher time frames. There's a lot of consolidation that's kept taking place. So it's a lot of dojis on a higher time frame chart. So right here is underneath the blue tracer, okay? It would say underneath yesterday's low. This is what we're looking for in USD CAD this week. For it to be at the weekly low, underneath the blue tracer, underneath the daily, okay? So we're going to look for something underneath the orange line that's touching the weekly low. It's going to be down here for more than 90 minutes. This is a 15-minute chart. You're going to look for your entry at a reversal pattern. Once the entry of the reversal pattern takes place, you will be in profit. Okay? Now, the thing about AUD USD, it was just moving really, really weird. It's still moving weird. And it's continuing to move weird. The market is going to push this back up for the midweek reversal. It did not reverse yet. Mondays, there is no reversal, so this is a fake out that happened on Sunday. It's testing this, and it's going to go back up. Okay? Maybe reversals, if you know, they run from 3 a.m. to 8 a.m., so this should not fake you out. AUD USD runs just like the EU. So if this is on a downtrend, EU is on a downtrend. There is no maybe reversal, so if you're a seller, man, you about to get trapped. Especially AUD, I believe is about to have some news, and I'm about to confirm it, because that move is not normal. What we got, Tuesday? See, right here, 9:30, we're going to have some news. Red folder and orange folder. Mark my words, at 8:30, these two folders is going to move this up. That does not mean go take this trade. This is going to go up. Because the maybe reversal is not over yet. It's still down here. It's just really, really messed up. I don't know why this chart's doing this. But it's going to go up. These are one of the crazy pairs that I don't like trading on. So on the H1, if you go look at it, it's on a semi-downtrend. And it's going to reverse back up. This is your daily. It's going to keep going up. This is pushing the dailies out right now. And that's why I focus on the the USD chart. USD CAD is a lot more smooth. All right. Anybody else got any more questions?
Your line is now muted. Your line is now unmuted.
How do you rewatch? Basically, we're gonna rewatch this. I'm gonna rewatch it myself. I'm gonna post the recording in the chat. The same concept like how I set it up with the other webinar. The reason why I had to make these private is because it's specifically for you guys. It's not for any other group. It's not for anybody else. This training is just one-on-one type of basic. I'm giving what you guys pay for, and that's for results, and that's what I'm gonna give you. Basically the template that I gave you, I saw a total template. The template that I have, that I put on there for you guys, is called Forever in Profit. Okay? Forever in Profit is the same template that I put in the chat. Now, with that template, you're just going to be looking for, you just want to load on these indicators. Oh, wow. Wrong thing. Yeah, that just happened. All right, so you're going to see these, you can see these indicators. The indicators that we use that I put in the chat is the candle time to spread, all right, which is this. I'm going to color it black so you can see it. Boom. Which is this candle time to spread. A spread, if you guys don't know what it means, it's basically the entry fee of the chart. So let's just say you bought in your AUD USD right now and you had a standard, you'd be negative 30 because the spread is 30. The last digit don't count. The first digit means the pips. So you'd be down 3 pips. 3 pips with a standard, $10 a pip with a standard, you'd be down $30, okay? The next bar is going to happen in 46 minutes. That's the candle time to spread indicator that we use. The daily high and low is the yesterday low and the yesterday high blue tracer, the blue lines, okay? That's the daily high and daily low. The sessions are these gray and blue boxes. The blue box is the Asian session. The gray box is your London. The moving averages that we use are the 5 and 12 on simple. My 5 is the purple. My 12 is the black. When it crosses, it changes the trend. When purple is under, it's a sell. When purple is above, it's a buy. When it cross, that's where. So man, when it cross, it's just a confirmation. It's not an entry. Okay. When it cross, I'll say it again. It's not an entry. It's just a confirmation. Your entry is gonna be at the reversal pattern. The daily weekly high low bands is the purple, green, orange, and red. The purple band is your weekly high. The green band is your is your daily high. Okay, purple band is your weekly high. Your green band is your daily high. The orange band is your daily low, and the red band is your weekly low. All right, and that's it. That's the only thing that we use. All right, well, I'm about to go post this video for you guys, and I'm gonna answer my questions in the Facebook chat, so everybody could like play this recording. Because I have me feeling a lot of people having like technical difficulties hearing me. You guys have to download the AnyMeeting app so you can hear me more cool, okay? And basically, just get these pips. I'm gonna go get some food, and I'm most likely going to see you guys in a few hours so we can start catching these Brink trades. And I hope to see everybody in profit this week. It's gonna be a crazy week. Let's get it. Let's make these pips. That's what we're about. Let's get these big pips. Let's get fired up. Let's get forever in profit because we are in profit and that's how we run it. We don't let these market makers run it. We run it. We run them. Let's turn up. Let's get these pips. Let's turn up. Let's do this, man. Let's do this. Yes, let's be pips and perp too. Let's just do this. Drink some water. Throat's dry. Let's get it. Let's get it.